All right, so here we are with oil. This is our weekend pre-market analysis. This is something we do every weekend before the market opens Sunday night. So I'm out on oil on a 4-hour time frame, and basically we've cleaned off everything we need to clean, or everything I want to clean off from the week before. I recommend, as you're down there day trading, to do that on a daily basis. Get rid of everything on your chart from your intraday trading. So let me kind of zoom in to where we are right now. So we know we have a downtrend line and we have an uptrend line that we expect for oil to stay between. So yes, they might break out there. This is a 4-hour time frame, but before they do break out of there, they tend to bounce back and forth. So I'm not going to miss out on that at all. I'm not going to sit here for days or weeks on end watching oil bounce in between these two trend lines and stay out of trading it. Okay, so I expect it to bounce between those levels, and so we look for the bounces as our indication to get in. We look for lower lows, lower highs, for a change in direction, and then we get in and we trade it short and we trade it long. So that being said, we go out to a 1-hour time frame, and we also don't just have our trend lines, but we need to look at zones. We need to look at the high and low bounces of where oil's been, and then we need to mark those 4-hour zones. So what we look at over the weekend is, should we adjust any of these trend lines or zones? So we actually have a where we have a high here that we saw a market turn, and we placed a zone there, and then when the market came down and bounced off of this zone, okay, so we had to bounce off that zone, which is off of this swing right here, this pullback. So when it bounced off that and pulled up and then pushed back down, then we put a downtrend line. Once it broke, okay, and made a lower low, then we're able to move that trend line. So at one point we had a trend line from here to here, extended here, and that one was broken. But then when it pulled back to test support, it broke through support. So at that point in time, you have to move that downtrend line over, okay? So that's the downtrend line we had been respecting last week, and then it got broken toward the end of the week. Okay, so we've been bullish on it, and you'll notice that it actually came down and bounced right here. Oil turned right there. It's off of a swing low back here, this swing low right here. Okay, we look back and we draw a zone off that wick. So that's right where it turned, to the bottom of that zone, and then we had a bullish push. Now if you're trading off a 4-hour time frame, you're taking that break of that trend line, or you're looking for a bounce. You're looking for it to pull back and bounce. We never got that. Now, if you say to yourself, I'm a 4-hour time frame trader, you're taking that break, or you're waiting on a bounce or pullback, but you're waiting on a 4-hour time frame. If you dial down to a 1-hour for your entry, you're a 1-hour trader. You're not a 4-hour trader. If you dial down to a 15-minute time frame for your entry, you're not a 4-hour trader. Okay, so don't trick yourself and say, well, I trade the 4-hour time frame. If you enter on a different time frame, that is the trader you are. If you enter on a 15-minute time frame, you're a 15-minute trader. If you enter on a 60-minute time frame, you're a 60-minute trader. You're a 3-minute, 5-minute trader. Okay, so you're a day trader. You look for the 4-hour time frame as your main direction and your main indication to get into a trade. However, you dial down to a smaller time frame to actually take your entry and put a smaller stop on. That's the trader you are. Okay, so keep that in mind. If you're a 4-hour trader and you're taking that long, your stop has to be under this swing. Has to be. That's where it's supposed to be. That's where the market's telling you to put it, below that swing. And unfortunately for a lot of people, that's a big stop loss, and they don't want to do that, and that's why they're dialed down. But just keep that in mind, that you're actually a 15 or 1-hour or 5-minute, whatever you get in and get into your trade and place your stop loss off of, that's the trader you are. Okay, so keep that in mind. So right now we have this zone here, which was a yellow zone. Okay, this was a yellow zone that we actually had turned to red. So this used to be an old red zone. This one down here was green and is still green. And then this one, after it pulled back and tested that and pushed down, So we drew it off of here, and it used to be our red zone, and it still is. It was on the red zone on the way up. Well, what we need to do is we need to change that. I'm going to color that one yellow. That's going to be my mid zone right now, because I'm still using this green zone down here as my bottom. So even though we're on a 1 hour or a 4 hour time frame, we know where the market is right now. Okay, we know where our price is at 74.97 before market open. So we need a zone below it. We need at least one zone below it, and then one zone above it. Okay, so that's my mid zone. I have my low zone down here because, guys, I could see this pulling, and just picture this. You know, it's either going to keep going when market opens up to this zone here, or it's going to turn around, and we're going to see a push to test the top of this zone. And if this doesn't hold up a support right here, well then, if it goes through it and that doesn't hold up a support, we can see it going back down toward that green zone. But what we have here is a 4 hour candle body low. I'm going to leave that on my chart. It was drawn, I drew it off this red candle body here. And then you'll see after it pulled up, it pulled back, really respected this level right here with these bodies of these candles. And then after it broke through here, kind of pulled back to that level. So I'm going to leave that on my chart. I don't expect those to hold up as much as the zones. However, it's a price level. It's a price level where the bullish side of the market, the bearish side of the market are agreeing on a price that, the bearish sides or the bullish side say, nope, we're not going to let you go down below that. That's what we're trading off of on the 4 hour time frame. That's what we're looking for. We're looking for the market makers. Where's things turning? And that's why we're looking at those highs and low swings. Guys, this is a huge price level here because it's off of this hold down move. We see other ones too. I mean, we had right here a good price level it pulled back off of, but then it broke it. Okay, but this is a huge swing right here. This is a huge bullish swing off of this low, this zone. So I'm leaving that on my chart. It never made it down to this one right here. So do I think it's gonna pull down and go through the zone and go back here? I don't predict the market. I don't try and predict the market. I don't recommend anybody try and predict where the tops and bottoms are. I'm not going to try and predict if that is the top right now. If we hit the top Friday, that's dangerous to try and, that's not the way to be a day trader. You have to look at the time frame that you're trading, and you have to look at the swings. Well, we haven't really made a swing. We had a nice push up. So is it extended to where it'll turn back? It could be. It doesn't mean it is. I've seen traders come in and they will short this. And guess what? They will short it thinking it's on this zone, or even better yet, back here. They will short it thinking, okay, it's going to go back. And then it keeps moving up and takes them out of loss. Guess what they do? They short it again. Surely it's extended. I'm almost, it has to be. I mean, look at the swing up. It has to be overextended. And my RSI says it's overbought. Well, that doesn't matter. The big boys aren't trading off your RSI. Okay? So use it if you want, but don't put a lot of weight in. These swings are way better to use than like an RSI or another indicator. It says it's overbought or oversold. How many times do you see the market say it's overbought, but it keeps pushing up? So again, that trader's going to short again, and it pulls up and they take another loss. I've seen traders, and I know traders that they've gotten in 3, 4, 5 times short as it's going up. There was one that did it like 2 weeks ago. 5 trades. He traded 5 times short as it climbed up. And the 5th time it went his way and pulled down. He made money. He's like, see, I can predict the top. I'm like, what about here where you said it's the top and you lost? What about here where you said it's the top and lost? Here you said it's the top and lost. Here you said it's top and lost. Here you said it's the top and you finally got in a good trade. Well, guess what? I traded long all the way up to that zone because it was forming higher highs, higher lows on a smaller time frame. And then it broke my trade line and started rounding over, and I saw lower low and lower high form, which led me to believe the market's turning. Lower lows, lower highs, go short. It's a bearish signal. So until you start seeing lower lows, lower highs, well, you have to stay in the trade. So you're going to let your runner go. And we even hold a runner when it gets to a zone. We don't close out the whole trade because if it pushes through this zone, guess what? It might come back down to test it and then push to this one. So that's why we leave the runners on. Okay. So do I know exactly where it's going to go? No. Nobody does. Don't let anyone tell you exactly which way it's going to go. I don't care what you want to call that person, but don't let anyone tell you it's going up. It's going down. The best thing you could do is look at the swings and say, guys, because I can look at so many reasons why this would not go up. If I come back, I can see this area right here. And this line right here is from price. So if you look back, you could see this level where all these candles were kind of fluctuating around that price. Okay, these 2 wicks over here hit that price. So could we see a bearish formation? I don't know. We would have to go down 1. And those are my zones. I'm going to change this yellow one. I'm going to keep it, but I'm going to put it red. Something we always don't do, and I don't go over, but I will, is alerts. So I know you guys are using alerts on trend lines. You can use alerts on these zones. One, I would put one here on this 4-hour line. Now, I would put that there and just put an alert that sends a signal out. We started getting signals out to the Discord. The live signals are going out when things are broke, targets. We sent out a bunch on gold as we were in a gold trade the other day long on Friday, and it hit several targets. So every target it hit, there's an alert, and that's what you want to do. So if you're doing it with the zones, say like this red zone up here, and you want to close out partial profit when it gets up near there, because keep in mind, they don't always go right to the price point and hit our zone. Well, what you would have to do is come in and put either a pure horizontal tool, or you need to put the horizontal ray, and come in and put a horizontal ray, just tag it up in here somewhere, and then go in and put an alarm on that, that gold or oil, is passing that, crossing up, if you want, hit it for once, and then create the alert. So that's going to go off, and it's on a 1-hour time frame is what it's going to tell you. It doesn't matter what time frame you put it on. But if price goes up, and I'm in it long, well, I want to be notified, especially if I'm away from the computer or walk away. I don't want to have to sit here. If I can get up and do a few other things, or if I have something I have to do, a meeting or such, or go somewhere, doctor's appointment, whatever. So you can set a price alert there, and as I like using my the ray, horizontal ray, and the only reason I like using that is because at the end of the day, I may delete those off the chart. It just depends. So definitely use the alert tool, and that way I'm notified if it gets up near there. So we don't see anything really on the 1 hour. We go down to a 15-minute, and those are the time frames we normally go down: 4 hour, 1 hour, 15-minute. Okay, and then as I get down, one thing I'm going to do is look at that horizontal ray and see how close we are. So overall, again, we were in a bullish turn off the 4-hour zone. There's how it looks overall. And then we actually got in here on a trade where it came up and formed this high. It basically came up, and on the way up it broke through. We had a horizontal ray off of here with an alert, and when it broke through that level, well, we were looking to go long. It came down, bounced, and now we were in that long trade on a 3-minute. And we traded it to a couple of the areas. We traded it to this line right here, which is a 4-hour candle body low. And then ultimately we traded it up here, and then we were looking to take it short when it bounced off that, if it bounced off that zone. So I know some of us got in. We got in on the short as well and took it short, which that was very short-lived. It pulled back. And then others actually stayed out because we had a trend line across here and up. And then you end up with, 9:30 in the morning, and it just kind of bounced sideways. It broke our 4-hour trend line, kind of tested the back of it, and that was another trigger to go long, that green candle right there, because it did break our 4-hour trend line. And then we traded it up to this zone, which is, again, off a 4-hour time frame. Well, it broke through, so this is why you leave your runners on. This was the trade entry. Broke a 4-hour trend line, gave a green candle, it pulled back to test the trend line. So multiple reasons meeting our criteria on several levels. For breaking the down trend line, 50%. For testing the trend line, that's another 10%. We didn't really have a retracement period because it didn't go that high off of it, pull back. We didn't have a retracement line to draw. And then we had a green bullish candle. So, about 70-80% reason to take the trade. So some people went in light, thinking, well, it could pull back to give a nice, several red candles to pull back to get in, but it didn't. So if you went in light, you're trying to add to your position, say like on this pullback. And then ultimately it went up, tagged the zone. This is why you don't get out of your trade 100%. So as it goes up, you close partial. Now, closing partial, it depends on you as a trader. Everybody is different. Your risk tolerances are different. Some people would get in with, say, let's use 10 micros as an example. That's what I always typically use. So everybody gets in with 10 micros, let's say. Trader 1 will close out 80% of his trade as it gets up toward the zone and move the stop to break even. So he closes out 80% of the trade, moves the stop here to break even, and he's still in as it goes up, and then closed out up here somewhere on Friday. You got extra. You made extra on that trade, on the runner. And trader 2 will get in, and then as it goes up to zone, he closes out 50% of his trade, only 50, moves the stop to break even. So both traders are still in the trade, and both traders have runners and capture, from where they got out and closed partial to even get more. So both traders have a bonus. So here's how I look at bonuses. It's not what I need to make per day, per week, per month for a living, to survive on. That is this part. That is where it moves up and you close out partial. Closing out partial should lock in what you need per trade to meet your per day, per week, per goal dollar amount. I mean, if I'm sitting here trading, I need to make money. I do not want to sit here and trade for 3 or 4 hours in the market and not make anything, because then I'm not doing my job. This is my job. This is my career. This is my business, okay? this is how I bring in money to survive. This is how I bring in money to eat, to pay our bills. Okay, so I have to lock in money. If I don't close out partial and lock in my daily, my per trade, per day goal, I don't meet my per week, per month goal. Just take what you need to make per month and divide it down. If it's $2,000 a month, you only need to make $500 per week. Well, there's 5 days in a week, so that's $100 per day. You can make that by closing partial. Your bonus just gets you extra. It puts you ahead of the game, where if you do have a losing day or losing trade, hopefully the bonuses you've locked in equal that out. Because I find with most traders, if they leave the runners go, then at the end of the month overall, then those runners outweigh the losing trades. As long as they're taking good entries, looking at the criteria, then that's what you want to do. So where it's at right now, it's above this zone and below the other. I would be down on a 5 minute or 3 looking for direction, and we don't have that. So where we closed out Friday, it still looks bullish overall. I mean, we're still in a bullish push. We're just sideways. That's just how it closed out Friday. It just went sideways toward the end of the day, and then right now it's sitting right here. I mean, that's all sideways movement. Okay. So one thing I would look to do is, do we have any highs or lows that if it breaks, it might go back to this zone? We do. So one thing I would do is come in and look back and say, okay, I see a wick right here. How was that price respected? I see one candle that wicked down there. So look to the left and see if there's another area that this price was respected. Well, if I go here, oh, it went too far. If I go to this low right here, well, it went down there. Remember, they don't have to go to the tick, not the exact price. They don't always get right there. So I look and say, well, that looks like a valid test of this price level. You know, it pulled up and pulled back, and then look to the left again. I could see this high right here. So that's where I'd want to leave my my horizontal raid tool. Price pulled up from this swing, tapped that price, pulled back down. That is 74.77, and then it went up and kind of bounced back and forth. So it's going to be up to you as to what price you use, but to me, that's what I want to be alerted on. Okay, so I come in and do two things. One is I would label this as support and resistance level, or low to break. You'll see you can do whatever you want to do, guys. It's up to you to be able to read the chart. So however your mind works, I could just come in and put support and resistance level and know that I need that to be broke before I get in short. You could put low to break. That's your low that you need to break before you would even consider going short. Now, ultimately, I need to see some kind of market structure. Market structure is going to be lower lows and lower highs. So just because it breaks that low does not mean I'm going to get in and trade it down to this zone. It means I'm going to start looking. As far as a high, I would come in. I think you guys can see that right here. I need to see that broke. And again, you can come in and tag this as support resistance or high to break. So right now, that's my high I want to see broke. That's my low I want to see broke. And I'm just going to come in and I'm going to come in and just relabel this as oil is crossing. Ooh. It's crossing low to break. And I want to set up an alarm. This is setting it up for tonight. Market opens here in about 4 hours. And then I would want to come in and do the same thing for the high. And just put that it's breaking the high to break. So now if I'm out, we're going out to dinner later. In fact, 5 o'clock. I got to leave at 4. So in a couple hours, I will be gone. And I will be out. And we're going to dinner at 5. We'll probably still be out, I can guarantee we'll be out. It's about an hour away. So we're either going to be still eating dinner and visiting with family, or I'm going to be in the car heading home. I'm not driving. I'll let my wife drive. And then if I get these alerts, I'm going to be ready to go. So that's what's good on the alerts. I would come up and set another down here. Now I'm just going to come back, and I want to know when it's getting close to the zone. So if it breaks this, if it crosses this low, and I don't really want to be alerted until a candle closes for me. Now let's see. I need to know, where's it at? It is not on there. So we just have a crossing. I want crossing down for one, because I only want to be alerted if it's crossed down below that. And then per bar close is what I want to do. So I want the candle to close below that. So I don't want to be alerted if it comes down, price just pushes below that. Here we are on a 5 or 3. I don't just want to know when it's crossing below. I want to know when it's closed below. So if it's closed below, I know I might need to get in there and start looking. I'll peek at it and see where it's at. And then my closed profit will be before it gets to the zone, a partial. Okay, so I would set another alert up here. And on this one, I'm just going to put it's nearing my mid zone. Okay, and then again, once on bar close, crossing down, hit that. So, and it's up to you if you want to put it right there. How close do you want it to go see, for me, I don't want to go right here. It's too close. I've probably closed out partial by then. So at that point, that's where you're either coming here to like this wick, or you're going in here and looking at it then. So what I would like to do is put it here. If I get it on there we go. So I want to know when it's there. So I want that price alert. Now I can always move it. So if price comes down and gets to that level, I can close partial, and then at that point I can take this and move it down even closer to the zone and reset the alarm to go off. But for me, it's right here for now, okay? And then you can label that target if you want, because that is going to be one of my targets to close profit. Partial, not all of it. Because here's the thing, guys, we could get in a short. If it signals and gives us lower, low, lower, high, we can get in short. It could come back down to this mid zone, and it could pull through and shoot back down to the 4-hour level. So I have to leave runners on. That's why we leave the runners on. As far as a high, we have our zone up there. That's pretty much all I need. So if it breaks through this level here, it may come back to test it. So if it comes up and breaks through here, look for it to, you always look for the test. It could come back and test it. It can even pull up here. Guys, what would be nice is if it hits here, and that's it. And then we get a bounce. But what could happen is it made a higher high. It could come back to a retest of this level before moving on, okay? Or it can even break back through and retest this low again and then move through. So that's why you have to just be aware of what's going on with the highs and lows, okay? And just know which way it could head, and then plan your trade accordingly. So right now, those are my two plans. I'm coming into the market. It's Sunday night. We know things are going to move, and I typically won't get into a trade, right between 6 and 7. I like more getting in between 8 and 9, but 8 to 10 I like trading. So I like trading 8 to 10 at night. If something's triggered and set up, by like 7:30, I will get in. But it has to be a good setup. I'm not just going to get in because the market's open. I have to see a good setup. So my two trade plans are just that. If it breaks through that, if it breaks through this, I'm going to look for it to, and I know this is small, but I would love to see a pullback and then a red candle here. And then my target would be first target here, and then my second target would be down here. But it could also pull back here and then push to that target. I'm going to hold a runner on in case it does this. Okay, that's what the runners are for. So I'm going to leave a runner on in case it pulls back here. But if it bounces and gives me, if it pulls down in here, top of zone, mid zone, bottom zone, but ultimately, in this move down here, if that's what happens, we should be seeing lower lows and lower highs. Bearish formation, bearish structure. Okay? If it starts rounding over down here, you'll hear me use that a lot. You'll see it start to move sideways. It starts to move sideways, like it'll push down, start to sway, and then push up. Well, then if I see a higher high and higher low, then I know that's a bearish formation. If it pulls down through here and I have a trade line on, if it breaks the trade line and then I see a higher high, higher low, well, that is a bullish confirmation for me. And I'm going to look, I see a green candle and I'm going to get in. Okay, so those are the trade plans. So do we know, does anyone know exactly where the market's going to go? No, not at all. Don't let anyone tell you exactly where it's going to go. This should be your trade plan. You should plan both ways. You've seen my little image I posted that says bearish, bullish, or whatever-ish. I don't go into the market with bullish or bearish bias because I'm an intraday trader. I look to get in on a 3-minute and a 5-minute. Now, that being said, we've been in a bullish move since Friday. So will that continue? I don't know. I can't tell you that. Would I love to see it continue bullish? I don't really care because I'm not holding. I mean, I got out of my trade on Friday. I really do not care if this holds and continues bullish. Could it continue or could it pull down and retrace back to here and be bearish? Yes, and I'll get in on that. So I'm going to be down on the 3-minute once these alarms are triggered. And if this triggers, I'm going to watch it. If it pulls back to give me a bounce here, I'm getting in. Higher high, higher low, I'm in long. If it comes through and breaks this low here that we drew from back here, and it comes down and makes a low and a high, and I get a red candle, guess what? Lower low, lower high, I'm short. I'm getting in short, bearish. Okay? And then we'll trade it down to the target and trade it here. And then and as you trade that short, draw a trade line. Draw a red trade line. As you trade this bounce long, we'll come and draw a trade line. And then if the trade line's broke and you see structure, start to set up in the opposite direction because on the long we should see higher highs, higher lows. If it breaks our trade line and we see lower low, lower high, that is bearish structure forming. Get ready to reverse. You would close out your position and get in short on a red candle. So this is how you should think ahead as to what the market may do. Be ready for that. Look to see how you would like to see it set up. Have your checklist. We have a checklist that we use that if it doesn't meet that criteria, we don't get in. If it is a 50% or 60% criteria met, we do not get in a trade. I might as well pull a quarter out of my pocket and flip it. Okay? If it's 50 to 60%. If it's 70%, we'll take the trade, but we go in light. So again, if you use 10 micros, if I have 100% setup, I'm going to put 10 micros on. I'm going to go all in on my contracts of what my risk to reward is. what I've deemed I needed to have as my max, as I limit myself to how many contracts for an account. And it's different for everybody. And it also has to do with their risk tolerance. Someone may say 4 is my max. And so 100% setup, they're putting on 4 micros. If they're closing out 50%, it's going to be 2 closed out at a target. And but if it's 100% or more, because sometimes we get trades that are 110, 120% reason to take a trade between candle formations and breaking highs and pulling back toward a support level. And we get a nice pullback, we have a nice retracement line to break that. So we've had some that are 110, 120% reason to take the trade. I'm definitely going to put on 10 if I'm a 10 contract person. I'm going to put in 10 all day long on those. If it's 100% or more, I'm putting on 10. If it's a 90% trade, how many are you putting on? Okay, if you're putting on 10 on 100, on a 90% setup, do you just go in with 9? Or do you back it down more and say do 8? Okay, because it's riskier. The less percentage you have to take a trade, more risk. So what I would do is look at two things. I would look at 70%. That is the only time you should enter a trade. If it's 50 to 60%, you do not take the trade. If it's 70%, how many do you put on? So let's say you're a 10 micro trader. If it is 70%, you will only go in with 4. Because you can always add on your position as it moves and let the market pay for your entry on the other contracts you put on. Okay? So that is a great strategy. If you go in light, I add to my position all the time. So again, if it's a 70% trade, and you normally would trade 10 micros on 100% setup, so let's say you do 4 micros on 70. Well, then 80%, you would do 6, and 90%, you would do 8, and then 100, you're at 10. This should all be pre-planned. So you need to sit down and look and say, okay, if I have 100% reason or more to take trade, I'm going to put on 10 micros. However, if I only get 70% setup take trade, I'm going to go with 4. More riskier. I've only got 70% reason to take trade. Hasn't met all my criteria to be 100%. So at 70%, I'm going to do 4. Okay, so your spread is from 4 to 10. So take and do 6 at the 80% mark, and then you would do 8 at the 90% mark, and then you would do 10 at the 100. Okay, so this is something you should think out. I know this is going a little bit longer than just our market setup here on gold or oil. So, but that's something you need to think about as you look at these setups, how many contracts you want to put on and adjust that according to the risk of the entry. Okay, and this should be pre-thought out before you sit down to trade. Okay, and this is what we're doing right here, playing these 2 setups and scenarios. As you can say, the 2 scenarios that may play out. This should be done before you sit down to trade. Don't just sit down and say, oh, well, I have a level here, boom, I'm in. I'm going to go in short because Friday we had this big bullish move because guess what? It could break to the long side. Okay, so plan for both and then plan your move of what you need to see to get in that trade. All right, hope you enjoyed the video. I know it went a little bit longer as I'm kind of preaching about how many contracts to trade, but this is how you should look at the market every weekend just to get ready to trade. And then also every time you sit down the market. So I don't always get up. I don't always trade the Asian session. I love to look for trades on the Asian session. If I can get in on a good setup, I love it because I try to let that go overnight. As you guys know, it doesn't always happen. Might go in my direction for a while, and then that's where I use the alerts, and hopefully it'll wake me up and I can get in and adjust my stop. The London session may turn it completely around, and then that might be a stop out. So is it a stop out but I've already moved to break even? It just depends. So, but I love to get in light at night, and then with the brokers we're trading through on some of these accounts, we have to close out, you know, at 5 p.m. every day, Eastern. So if you're trading with them, I love to get in at night, let runners go, close out partial, and then be in that trade overnight. Again, it doesn't always happen. London will typically turn it around. We get stopped out at break even or a small loss against our gains. We're fine with that. So I love getting in, but ultimately, if I don't trade tonight, and the London session is going to move, it's going to go, you know, everything's going to move one way or another throughout the night. So let's say I'm sleeping, and then I get up during the U.S. session. My first thing I do in the morning, other than getting coffee, should be to come into this chart and not be down on a 3-minute time frame. My first thing I should do is come down and look at a 4-hour time frame first, see what's happening. I may come down in the morning, and the London session may have pushed it up to my zone. Okay, well then I'm looking for a whole different thing. Okay, I've no longer this passed. It's either gone up, or it's come down here and bounced and gone up, or it's come down here and went through the zone. So when I get up in the morning, if I haven't traded through the night, and I'm not going to get up tonight and look at the London session, so I have to look at a 4-hour time frame. So here's what I recommend. Before you shut down your computer, this is something I always do. Mine stays running, but before you walk away after trading, turn it back to a 4-hour time frame, and then walk away from your computer. This will force you, 100% force you when you come back next session. So let's say when I come back to the U.S. session after I get up in the morning, it will force me to look at our 4-hour time frame. It's there. It's in my face. I can't do anything but see it. You can't unsee it. So that's what I want to do. So this is helping to place odds in your favor. Okay, I want to be able to see on the 4-hour time frame what has happened. Now, do I know if I'm down on a 3-hour? Yeah, or 3-minute or 5? Sure. I mean, I know I can pop to a 10. And do I know overall what's happened? I do. If it pulls down through here, pulls down through the zone, pulls and bounces, starts to move, yep, it's in a bearish move. I can see that on a 3. I don't need to go to a 4-hour. I can go to 4 hours and know that the 4-hour candles are pushing down. I really can. I can come up here. I could go up to a 4-hour, know it's been long all night, or even pop through that zone. Okay? But here's the thing. If I'm down here, do I know exactly where it's going to go? Now, I kind of know, I can see the shorts. If it's going short, I can look down at my line that's labeled and say, hey, it's moving short of a 4-hour candle body low. I do not need to look out at a 4-hour time frame to see that. Now, if it pops up through this zone, where's my target? I mean, where's my next target if it pushes through there? Well, I have to go out to a 4-hour time frame and look at it there. And let me adjust this and see where it's at. Well, my next 4-hour time frame I have marked is way up at the top of this huge swing. Now, if it breaks through this zone right here, I'm going to do 2 things. I'm going to change my yellow zone to green. I'm going to change this red zone to yellow, and I'm going to come in and I would draw a red zone up in here. Okay, and I'm not going to use that whole wick. That's too long. What I would do is look at the high of that candle and look at the high of this candle, and that's where I want to look to see how does that zone look. But for me overall too, I see a swing back here. Okay, so I might use that wick to that candle body right there for my zone, and I could see how that whole swing's respected. So for me, I would come in and I need to draw another zone. This is why you need to look. If I wake up in the morning, come to the chart, and price is up here above that red line, red zone, before I do anything on a lower time frame, I'm not even going to look at a lower time frame. If price is up here above this red zone, I have to adjust things here on the 4-hour time frame before I go down and look for an entry. So what I'm doing again is I'm going to change the yellow zone to green, the red zone to yellow, and I'm going to come up here in this area and look for a swing level. And as I see this, don't forget to look to the top of the chart, or left of the charts. I see this high, I see candle bodies. Well, guess what? Over here, you see some high bounces. Well, guess what? I'm going to draw a box in here. I'm probably actually going to come back to this high right here and draw it down. And let me go ahead and do that. And you can see what that looks like. But I always draw from the top of the wick down to like a candle body. It could be that candle body, or it could be a different candle body like that. So that, and then I'm going to color it red on this one. I'll go ahead and leave that and color it red. Because if it breaks through the one zone, now I'll know. And we'll just color that one red. That should be my target to close partial if I look to get in long. So we got several areas up there. But if you don't, then you have to be aware. So that's what I want to do. I want to leave this on a 4-hour time frame and shut down for the night. And then again, when I come to the chart in the morning, I'm forced to look out at the 4-hour time frame and make any adjustments that I might need to. And as the pair pulls up and make higher highs, higher lows, I would definitely come in. And right now you can come in with a trend line and draw off of this candle wick to this candle body. I got on the wrong body. There it is. Wrong candle. So that's where I'd want to draw an uptrend line right now for the pair, or for oil. And then if it pulls down to that, so I could 100% see it on a smaller time frame, pulling down to our yellow zone, pulling to that trend line and bouncing. Okay, now if I'm in short, I'm gonna hold a runner just in case it breaks both those and comes down to here to test this level, or even test this high. So that's why we hold our runners, and we just adjust our stops as we go, because the runners sometimes can bring you, and I don't know what you're shooting for. Everybody's different. I tell people, look at a monthly time frame. What do you need to make per month? If it's $2,000 per month, that's only $500 a week. So $100 a day. One trade gets you there, and then you've got runners for bonus. If it's $4,000 a month, that's $1,000 a week. That's $200 per trade. It could be 2 trades of 100 or 1 trade of 2, and then you leave your runners on for extra. So everybody's going to be a little different on that. But it could pull back down and bounce through there, or it could break and run. But sometimes these runners that you leave on, just the runner alone, can be $100, $200, $300, $400, $1,000. So the runners add up. So guys, if you have 3 or 4 or 5 runners that come out to make $500 to $1,000, let's say $500 to $1,000 on 3, 4, 5 runners. I mean, how much extra can that get you for the month? It can get you enough to where the next month you would not have to trade, because you've met your monthly goal for the next month. That's what the runners do. I look at the runners as bonus, and I use the runners for riskier trades. So for those that don't trade news but you want to trade news, I recommend only risking part of your profit from the week before. Well, my profit from the week before, I have to take off my day trades, my partials. Partials don't count. So if you're looking to make $500 per day, and you make $500 a day, I made $500 a day, let's say, every day last week, I have no extra to trade news this week. So I'm not going to experiment with that. I have no extra. Now, if you're looking to make $500 a day, and last week every day you made $700, well, you have 200 times 5 days, you got an extra $1,000. You can get in some riskier trades if that's what you want to do. And you can experiment with some news trades. Only risk part of your profits from the week before, and it should not be any of your profits locked in to make your daily, weekly, monthly goal. All right? So I hope you enjoyed. I will see you in the next one.